The stock market is a device for transferring money from the impatient to the patient. Okay, so there's a reason why we all know this one, right? I had mentioned this one in another episode, and it was kind of similar to the quote a few minutes ago, but I need to come back to the heart of this message for a minute because it's so hard for really active traders, especially day traders, to have patience. But the reality is that impatience is so dangerous. Like, it really does lead to overtrading, revenge trading, getting in way too soon, breaking your plan, giving back profits that were earned with intentional trading because you get caught up in you may have had a really good intentional trade and then you want more, you want greed.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Okay, this episode is long overdue because I cannot wait to dig into some of the greater known and lesser known facts of someone very important in the trading world. Okay, so there are traders, we probably know many of them, sometimes maybe we were one of them, who chase the market and who try to catch the next best trade and kind of get lost in the weeds sometimes. But I think there are investors, long-term market traders who let the market come to them. And so today's legend for learning from legends with Market Mamas is someone who built one of the greatest financial track records in history. And he didn't do it through speed or through complexity, definitely not through hype, but he did it through patience, discipline, and an almost stubborn commitment to simplicity. Okay, so I obviously, we're talking about Warren Buffett today, and this is I'm Becky, host of Market Mamas. This is the Learning from Legends series that I do. And I mean, when I had my short list of who I had to have on this, when I got this started last year, Warren Buffett was, of course, in the top 5. And so it's his turn. I wanted to go over the bigger picture things that we all really know and love him for, but also I found some lesser known information about him that I don't know that everyone has heard. And so I'm really excited to just kind of pour out all the things that I learned about Warren Buffett that I knew and didn't know and understand better now. So let's see if we can learn from this legend together. Now, Warren, he started investing at age 11. What? Okay, so he filed his first tax return at 13, and by his 30s, he was already a millionaire. But what makes his story more powerful for us as traders is not just what he built. More so, it's like who he became as an investor in this industry, how he thinks about the opportunities and what is available from the market. And I actually really love making episodes that I feel like have real value for traders. And so today I want to dive into kind of the life, but also the wisdom and his best quotes and where they came from. And then some actual actionable lessons from, one of his nicknames, the Oracle of Omaha, Warren Buffett. So let's dig in and I will tell you all the things I have learned. And if you guys know facts about Warren Buffett, please drop them in the comments. I would love to hear from everyone listening today. Like, you love him, you hate him, what you learn, what you like, what you don't, where you started on your trader journey, and if it has any parallels to what he has created and what you're striving for, because I know I have. Okay, let's start when he was young. I love starting. I'm so curious about traders that have really made it in this business. I'm so curious about where they got started and what was the fire for them. What was their history? How did they come to be where they were? And one thing I love about Warren Buffett is that he was not born into Wall Street. He wasn't at all born into that world. He was born in Omaha, Nebraska in 1930 during the Great Depression, which is the time that I think from everything we can learn from him, I think being born of that era deeply shaped his relationship with money, which makes sense, right? From an early age, Buffett reportedly displayed an unusual obsession with numbers and value. He sold chewing gum door to door when he was young, delivered newspapers, bought pinball machines and placed them in barber shops and take some money from those. When he started learning about the stock market, he would memorize stock tickers as a child. And so by age 11, he made his first stock purchase. Like I have kids and I don't know what is in his genes or what, but mine are not quite there yet. And I am so impressed. So what his first stock purchase, for anyone who's curious, was 3 shares of Citi's Service Preferred. Okay. He later said, I was born wired for allocating capital. I mean, I can't really argue with that. Like, he started so young, like, it's really impressive. But here's what matters for traders. He didn't start a legend. He started as a curious child making small, imperfect decisions and testing the waters and studying and like putting some skin in the game young, but figuring it out from nothing. And so I love learning lessons from these people who create it kind of on their own like this. And so one of his early lessons from his early trading was actually that he ended up selling his shares too early, which is so interesting knowing what we know about him now, right? That was early lesson for him because they went up modestly and he took a quick profit. He was young, he didn't know what he didn't know, and he was happy to see profits, I'm sure, right? But then when he watched the stock multiply several times after he exited, that early choice began to shape one of Buffett's core philosophies, which is patience beats impulsiveness. I've learned that one the hard way too. Okay, so I think that was something that he started to cultivate very early from realizing there was more profits he left on the table, and had he just hold on, it would have been a different situation. So Buffett's trajectory really changed when he discovered the work of Benjamin Graham, often called the father of value investing. Buffett read The Intelligent Investor, and that fundamentally rewired how he viewed the markets, which, side note, but that was the first book I ever read related to trading when I started learning about the stock market in early 2021. And I was like, what is this? Where can I learn? Of course, that's on the short list of books that I would recommend it for traders. So that was my very first book that I read when I started learning about the stock market. And it was so interesting, like at all the concepts in that book. And so it's kind of cool, honestly, that that's where Warren Buffett started too. Huh. So instead of seeing stocks as moving prices, he really started to like dig into the thoughts all around it. And he began seeing them as pieces of businesses, which, when you're a stock trader and you have some money to invest, it really is a small percentage of the business, right? He later ended up studying under Graham at Columbia Business School, and then it did eventually work for him. Like he really pursued that relationship full on, head on in, right? So this is where one of Buffett's most important ideas that likely you have heard quoted before was born. Price is what you pay, value is what you get. That was his underlying core philosophy from everything that he has built from that early age, because the markets are emotional and the price is going to fluctuate constantly. But value, the underlying worth of a business, that is grounded in that business's fundamentals and who that company is, what they do, what they offer to humanity, what their long-term trajectory is for this culture, for this world. And he understood that very early. That was a big factor for him. And so for traders, even if you're short-term focused, this principle does still matter. If you think, the way I was thinking about it is, are we reacting to price? Just catching every candle as pushes up, so you want to go long. Or if you can, the deeper you get into trading, I try to understand the context around it. I don't want to chase the movement, but instead I want to identify an opportunity. So if we are sinking down low, 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 and we're starting to lose momentum down, and there's a previous area that we've sunken into, maybe this is a supply or a demand that wants to hold. And so there could be a really good opportunity for a move up there if buyers want to defend that. And so I think instead thinking about chasing every candle, but instead trying to find value in the price movement, even intraday on a 5-minute chart. It's a different kind of approach to trading, similar to how he approached stock market. And if a company had a strong underlying base and you could just find a good opportunity to join that company, because I think that is a really powerful concept. And that's something that Buffett teaches in a variety of different things that you can read from him about not confusing motion with meaning. So like if it's moving, it doesn't necessarily mean that direction is solid, but what is going on with the bigger picture? Like he definitely really prioritizes fundamentals. And that is so helpful for me to understand, because as a future trader predominantly, that hasn't always been a huge part of my process. But I really like kind of infusing it into it because I think it makes me stronger as a trader also, and is growing me up in the investor that I intend to grow into as well, with my, future trading profits. So, all right, you guys probably know Berkshire Hathaway, right? That is the company that he owns and has made a ton of money. Like it's a great stock now. It's incredible. But I don't know if everyone knows the base of that. So let me tell you. So Buffett, eventually, as he was growing up in the stock market world and business and finding his footing, he took control of a struggling textile company, which was Berkshire Hathaway. I had no idea until I researched this episode, but that Berkshire Hathaway was a struggling textile company when Buffett acquired it very young. That's probably why he, could afford it, right? At the time, it was a failing business. The business owners were done. He got it at a good deal. Buffett recognized that he needed to use it. He needed a business to use as a vehicle. And so what he ended up doing with it was not so much the textiles, but instead he transformed it into a holding company that would acquire some of the most iconic brands in the world. Like from Berkshire, he started buying pieces of all of these other really strong companies and putting it into a portfolio essentially. So Coca-Cola, American Express, even Apple in later years. So smart. And so here's what's kind of remarkable is that Buffett didn't build Berkshire through constant trading. I think that in this current day and age, there's a lot of energy behind trading, a lot of fast pace. Like you can make, 10 grand in 5 seconds. But that was not his style, and he built real wealth. And so that's why I kind of wanted to bring this on, even for futures day traders or forex day traders or what have you. I love these concepts I want to kind of bring them into the underpinning of everything that I'm doing on the charts, no matter what. And so the way that he built Berkshire Hathaway, it wasn't from like a rapid, crazy, impulsive trading. Instead, it was through selective conviction. He wanted to really find the best deals at the opportune moments. Once he was quoted saying, the stock market is designed to transfer money from the active to the patient. And you guys, I freaking love this quote because it's so stinking true, down to even the smallest transaction, right? Activity feels productive, but in the markets, overactivity often leads to overtrading and losses, and you get chopped up. And maybe you had a good trade in the morning and you wanted a little bit more, so you continue to engage. And that can get you into trouble so fast. I mean, I certainly have been there where I had a nice, clean morning and then I messed around and found out, and it got me into trouble with the market. And so I think being very particular on your best opportunities and only putting capital on the line during those moments is something that he definitely prioritizes reportedly. It's a hard lesson though. I mean, if you think about it, even on a bigger time frame, even as a day trader, we don't need to trade every day. We don't need to trade all the time, and we can't expect to catch every move. We don't need that. You don't need constant action to be successful. Sometimes your edge as traders is actually in waiting, which is the superpower of the patience, right? It's saying, I'm not going to put my capital on the line unless I see a great setup, XYZ. I want it to be an A+ setup truly. Otherwise, I just don't have time for that business. That patience is really powerful for letting it all grow, right? So Warren Buffett, I mean, he's been around for many years, right? And so I wanted to kind of dig into some of the things that he has said that maybe many of you have heard. And I definitely have some that I don't think everyone has heard. But I want to kind of pick apart a couple of his more known things and see what we can extract the lessons that are behind the quotes that we know and love him for. Okay, so I have to say one of his quotes is, rule number 1, never lose money. Rule number 2, never forget rule number 1. Okay, so I love that, right? Let's not lose money. At first glance, I mean, it sounds like crazy town, right? It sounds unrealistic. Of course, we don't want to lose money. We're traders. We're here to make money. But, losses are part of trading. However, Buffett isn't saying, he's not saying never take a loss. Instead, he's saying protect your capital at all costs. And so I think the core of that, how I interpret it, is that risk management has to be the lifeline of trading. It has to be the priority. Position sizing matters more than prediction. Having a really strong trading approach and strategy, and only putting your risk on when it's a really high value trade. There's a strong risk to reward. You feel high conviction in the success likelihood of that trade. That's when you put it on there, because your priority is not lose money. It's to have an account, to have capital, to be able to continue to execute day after day. And that survival as a trader or investor matters more than profits. Like staying in the game, having your account be able to compound over time is the most important thing versus a quick grab at a quick move that is a higher risk situation. Instead, maybe downsize your risk a little bit and be super particular. And in that way, the priority is not losing money because you're really being quite selective. One thing that makes me think of this is that I do some streaming at the prop trading company Blue Sky. They're really great over there. And their owner actually is a boss trader, and he trades many mornings at market open with the team. And one thing that he says is he doesn't call his stop loss a stop loss. He calls it a stop gain, because never lose money, rule number 2. And never forget rule number 1. I think that's Mike's approach as well. So not to you, Mike, but stop gain means once you're in profit, you do protect your gains. You do adjust your stop loss. You do adjust your take profit, whatever, however long you're anticipating holding the trade, but you migrate up your stop as you move into profit. So that way you don't go from green to red. That is a recipe for letting your accounts grow. Now, squeezing a trade is different. There's a discussion around that. But once the trade starts to progress, if it's a trade that has had some time to move in your profit direction, I love the idea of a stop gain where you tighten that up there and you protect yourself so that you do have an account to trade month over month. And maybe you don't get a grand slam. It comes back and you have like a modest profit. But you know what? Green is green. And it could be the next day is a grand slam and your account's held so that you can capitalize on that next grand slam. Your accounts didn't go red. You didn't get in some kind of situation trying to get frustrated and revenge trade because it did come from green all the way to red. So it's a great point right there. Okay, next quote from Buffett. Be fearful when others are greedy and greedy when others are fearful. And you guys, this is one of the most famous contrarian principles in markets. And I have quoted this many times myself because it's a part of my strategy, honestly. It's one of my most favorite Buffett quotes of all time because I see it that way. Like I see the whole idea around that. So for any of you that know me, and you've been around Market Mamas for a little bit, you actually know that I have a very strong contrarian energy about me that I am constantly working to both embrace, but also like balance and fight against sometimes, because I do like to see, if we're falling really hard into a level, there could be a continuation. It could continue to fall, but it could also like fall really hard into support and then have a really strong bounce up. And goodness, we've seen that recently in the markets. And so to have this whole like always being like cognizant of what's going on and where are we at on the charts and the larger time frames, because if others are greedy and they're chasing the highs, you might be a little bit worried. But when it's falling, when the market is falling really heavy into a potential support and others are afraid and think it's just going to fall for the next 20 years because this is a terrible momentum, that's when you could think, shoot, are we falling into value? Like, where are the buyers going to defend? And so that's what I feel. That's the energy that I feel behind it. Crowds are often wrong at extremes, which is a very true thing. When everyone is euphoric or making all new all-time highs, it's going to fly to the sky. Like there is no cap on anything ever. That's when risk is high because the move is really extended. It's pushed. Where the heck you put your stop in that if you're trying to hold it long term, right? Now, the inverse of that too is when everyone is panicking, opportunity may exist. So if the market is falling, we've been in a downturn for months, as we have seen earlier in this year, there's going to be a time when there's going to be the opportunity for the buys. So I think that the concept around it is something to always think about, especially when you're at an extreme of a move. Is it getting euphoric and overextended and this is not a situation to chase? Or did we fall really hard in potential support and maybe you don't want to chase the shorts either? It's about, watch yourself, right? You don't catch a falling knife. That's not what I'm saying. But to think about it, to think about where we're at and what could happen instead of just feeling super euphoric or super fearful at extremes. And so I think you want to think about how we can, as a trader, I want to think about how I can articulate that wisdom into my strategy, because this is something that I've definitely experienced and I've done it successfully and I've done it unsuccessfully. I think I've seen and experienced and traded both flips to that coin. I have certainly chased a move and regretted it. And I have certainly been able to capitalize on a high value opportunity by getting in at an extreme and reading it correctly and having an excellent trade with a high R to R. I think that there's a system and there's a way that both happen. And so I think that the core bits of advice to this whole strategy is that you have to just be really cognizant and careful, attentive to what's going on, avoid chasing the hype, right? Be cautious in overextended markets because, at some point there's going to be a counter play at some point. And so you need to always just be super present, I think. And then look for asymmetric opportunities during fear. So we saw that certainly with the hold a couple of weeks ago on the major indices, ES and then Q, where we fell really hard for months. And then we fell into a key level on the weekly, monthly chart. And there was a crazy bounce out of that area. And so that's an asymmetric opportunity when there was a lot of fear in the market. The market just keeps falling. And when is it going to stop? And people were very anxious about their 401ks. And I'm recording this on April 21st. We are at all-time highs again, and we're experiencing some pushback. So it's very interesting to be recording this episode today. But I want, for me, that is always in the back of my mind when we are breaking a high or breaking a low or falling with a significant aggression, pushing with big aggression, you yes, trade the trend because it hasn't bent yet in that situation, but know where you're at and that there could be a counterplay at any time. That's kind of like the, stay focused, stay attentive, I think is the biggest part of that.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
Okay, so another infamous Buffett quote that everyone has heard, but I have to say it is, the stock market is a device for transferring money from the impatient to the patient. Okay, so there's a reason why we all know this one, right? I had mentioned this one in another episode, and it was kind of similar to the quote a few minutes ago, but I need to come back to the heart of this message for a minute because it's so hard for really active traders, especially day traders, to have patience. But the reality is that impatience is so dangerous. Like it really does lead to overtrading, revenge trading, getting in way too soon, breaking your plan, giving back profits that were earned with intentional trading because you get caught up in the, you may have had a really good intentional trade and then you want more, you want greed, you want to get more, right? And so then you get back in, but you're monkeying around and your greatest opportunity already happened and you capitalize on it. And so that is when you can be impatient for another great setup and really mess yourself. Check yourself, you wreck yourself, right? So the lesson behind that priority on patience from that quote is it's really logical, right? Discipline will compound. If we are disciplined with our trading plan and our entries and having a good risk reward on our trades, then you can have a consistent gain. You can have an account that holds steady through the hard times and grows. And impulsiveness, that will drain you. It will drain you mentally and physically and financially. It will drain the accounts. It will have the resets. If you do impulsive chases, it gets dangerous. And so that can injure both your mental health as well as your accounts. And that's something that can't be understated enough, is that you really, if you're feeling sort of impulsive and impatient, try to remember, accounts compound with patience and not trying to catch every single move and only taking the ones that you really feel passionate about and that are really good setups per your system. Okay, so everyone's heard those quotes, I'm sure. But you've stuck with me this far. I'm going to make it a little bit fun because I'm going to bring some gems that not everyone knows about the legendary Warren Buffett. And I have a few lesser known quotes to get us into it. So the first one that he has said is, you only have to do a very few things right in your life, so long as you don't do too many things wrong. So the meaning here, right, is that success isn't about constant brilliance. You don't have to be perfect. You don't have to be an exceptional savant in order to be really good at trading. But more so, if you can just avoid the major mistakes, you'll be all right. If you don't have massive blow up tilt days, you're going to survive. And if you keep learning a good strategy, then you'll be able to execute on that good strategy, and not having the massive blow up days is the recipe for success. And so for traders, the message, of course, right? One bad trade shouldn't destroy your account. One stop out should not take you under, because the risk should be reasonable and you should be able to allow that to happen and know that that day you just couldn't trade and your accounts will grow. And that consistency will beat out occasional big wins. Instead, just locking it in, protecting your account, having reasonable stop losses and honoring them, that consistency beats over time for compounding accounts significantly. And so you want to we want to protect our downside relentlessly. That has to be the priority of protecting your backside with core rules that are non-negotiable. And I know non-negotiable, we're all humans and as we monkey with our system, but try to prioritize, I have these rules for a reason. I really believe that consistency compounds. And so I want to always honor my leverage size that I'm in right now, and how I honor my stop, and how I stop after maybe 2 red trades and I call it a day. These rules are powerful for your momentum as a trader. And so consider that patience will compound as well. So Buffett also said, risk comes from not knowing what you're doing. This is one of Buffett's, I think, kind of misunderstood ideas from everything that I read on him when I was preparing this episode, that I think that you could take that a lot of ways. But what I think it means is that he's not saying risk disappears with knowledge. You can't learn your way into never having risk. But more so, I think the whole point of that is that when you lack clarity and a clean understanding and strategy, your decisions will lean towards being more emotional, more messy, variable. You'll trade on impulse and intuition and hunches and following this guy because I think that guy wins all the time, instead of trading from a strong strategy based core understanding of what you're doing. And so I think that as traders, it's really important for us to spend the time to really feel like we can understand our strategy deeply and know what your edge is, what your A plus setup is, how to manage that, how to get in, what to do when it sets up. Because it's tricky as traders if we're guessing, because when you're kind of guessing and you don't really have a strong base, you've got to trade smaller size, because that's almost more like gambling. If you don't fully understand what the market is doing, why it might go to where it might go, and what to do with that, it's more of a gambling energy than trading a strong strategy. And I think that clarity on your system, it will reduce your emotional decision making, which is way better, right? A strong playbook that you have poured into and fine-tuned and asked mentors about and back-tested and forward-tested and adjusted over time, that will always be your strongest approach to trading versus, trading without a strong knowledge base. And so knowledge doesn't mean that you're never going to fail. It more so means that you have a much better starting place to be a successful trader from, right? Okay, so here's one for our investor listeners. A Buffett quote reads, "Our favorite holding period is forever." Now, this is where traders often think, okay, well, this doesn't apply to me. But I think it does. I think it can, just in a little different skew on it. So the core idea of this quote, in my opinion, is conviction matters. Buffett holds because he understands deeply and fundamentally, and he is an investor. And so that's a different situation where he I believe, only buys companies that he believes are strong and will overall, those go with the direction of the market and will be rising over the years. And so he believes in that, and he holds, and he gets only in on the best opportunities on companies that he thinks are strong and will hold. So for traders, I think it's a little bit different, right? But our version of this could be, if you think about it, the way I think about it is that it's trusting your setup. It's trusting that you got in at a support level that has a lot of reasons to hold, a lot of support and conviction and confirmations in your setup. And so then you need to let it play. You need to not squeeze it too early and let it go all the way to your target and maybe have a runner if it keeps going. And so this sort of energy is basically not cutting your winners too soon, but instead let them fly a little bit, trusting your conviction that you had a really good trade entry, and to give it a little space, a little patience, a little time to really let it bring you more full profits than maybe you would if you were more impulsive and impatient and just locking in the first set of green. So it's not necessarily you want to hold, an ES contract till the end of the market, although if you had an account in that strategy, I suppose you would, right? But more so it's, for me as an intraday trader, I like to put it into my own perspective of letting, if I got a really good entry, letting it play, It's a way to put that value into our trades. Okay, now this next quote is one that I hadn't heard until I was researching for this episode. But before I tell you it, I just want to take a minute. Can you guys just throw a like and subscribe to Market Mamas if you haven't already? I nerd out, right? I really pour into this channel, and I think about these episodes. And I mean, if you're into it and you're still here, maybe show me a little love, subscribe, hit the notification or whatever, come back, give me a comment. It helps, and I feel weird asking, but I appreciate you guys. Okay, this next quote is the one that I had not heard before, but it's a true word of wisdom. It reads, "Chains of habit are too light to be felt until they're too heavy to be broken." Let me read it one more time because it's gold. Chains of habit are too light to be felt until they are too heavy to be broken. I mean, that's trader psychology gold. It really is. Your habits, what you choose to do and engage in every day, over trading, moving stops, chasing entries, squeezing trades, those feel dangerous. But in the moment, they maybe are not a big deal. It's fine. It's just a little choice. But as they compound, they're right. Those habits, if you let them be something that you engage in, they can create a dangerous trading system that really is just not safe for you. Ideally, instead of those behaviors that we allow to happen sometimes and be a part of our habitual activities, instead, we want to build the discipline habits as soon and as fast and as repetitively as we can. Because when the inverse of bad habits is equally important, because if we can lock into really great habits of strong risk management and always having our due diligence on our trades, then I think we can become traders who over time really value consistency and it's non-negotiable. The more you repeat an action, the more it becomes who you are, right? Our habits create who we are and how we approach everything. And so in the beginning, it's just a little thing here and there. I'm just choosing to always honor my stop, and I'm choosing to stop at a certain time. And if I can't focus, I don't trade. These little choices that you make every day, the more you consistently make them, then it becomes something unbreakable. You become a trader that is just who you are. That's your identity. That's how you always operate. And so it might seem small in the moment where you're just making this one decision to just really honor these rules that you want to prioritize. And if you keep stacking those days, then they create that strong force that you don't break it anymore, because that's not what you do. And so I love that whole idea of little habits don't have to be a big deal until they create the person that you are, where those habits are non-negotiable, which, is something that all of us as traders should strive for, that sort of energy of like only ever engaging in our best habits that we know bring us the profits, right? All right. So a little bit more lesser known facts about Buffett, since you guys are here and I want to tell you all the cool stuff that I learned. So to make this episode more human and relatable, here are some of those like lesser known little things about him. What that I kind of love and is so cute is that he still lives in the same house that Buffett bought in his Omaha hometown in 1958 for $31,500. And that is the home that he lives in today. Now, I'm sure it's had some upgrades, some a little remodel probably, but like 1958 for 31K is where he lives right now. And I just like, that's his roots. That's where he's from. That's his home. And he didn't never change that, which is pretty cool. Also, Buffett avoids complexity, which he is famous for because he avoids investing in tech for years because he didn't understand it. It wasn't in his wheelhouse. It wasn't something that he felt comfortable with. So he did it for a long time and he caught a little heat for that. But what he did during that time, why he's still such a successful investor, is that he stuck with his strengths until he felt ready and he really was on board and available to tackle and learning a new space. Such as, he got into Apple later than a lot of investors, but still he did, right? He stuck with his strengths, though, and he let his wealth compound. And then he slowly, when he was ready, took on more projects and understood the next spaces. And so I love the whole idea of like, we don't have to be masters of everything to be successful at our craft. Maybe you're really good at one instrument, one market, and you really see these certain setups within that market super consistently. And so that is your A+ setup. And so having that, you want to try and really pay attention and catch those every time. You don't have to. Maybe another trader that you're friends with has a different A+ setup in a slightly different instrument that they're really good at. And you're not less because you don't see that one as well. Like, you're not an unsuccessful trader because you can't see everyone's edge and catch them all. No, more so you have learned a certain thing. It's really successful. You've dialed that in and you will have room to grow. We all will. You can learn another setup and another instrument in time. But when you rush it and you try to be the master of everything, that is a dangerous situation where you can just be putting leverage on without actually like a strong stance with it, right? And so I love that whole point of like, he didn't dig into AI and tech as soon as whatever, but when he eventually did, he understood it. And in the meantime, he maintained mastering his craft. Like, it's great. You don't need to trade everything. I think we want to just do our niche and understand it and capitalize on our best opportunities and let it grow over time when we have the mental capacity to learn what we need to learn. One other thing that really I think is powerful for him is that he reads 500 pages a day. Apparently, Buffett spends most of his time reading and thinking. So like different books, yes, but like, the shareholders reports and the fundamentals of the companies that he's invested in, and he understands the ins and outs and all of that. Like, he's a huge fundamental driven trader. So for us, if we could flip that into like a day trader more type approach, I think preparation matters. Preparation matters more than executions. Really understanding your setup. You can equate it to, yes, reading a book, but like, what about traders? You also can read your charts, do back testing, study your system, your style, your strategy. Like, put energy behind really understanding what you're doing and all the backstory behind it, and you will be stronger. You will understand more. You'll be able to execute more effectively and efficiently and on point if you have that effort put in on the backside of that, which is something that he is famous for, is all of that reading. Now, I'm not sure if he still does that at his age, but I know for his whole life, he was a very, very voracious reader. So Buffett made mistakes. he made big mistakes. If you look at his track record and it's all public, like you can see what he has done, what Berkshire has done when they have bought and they sold. And he has openly admitted to billions in missed opportunities and errors, which kudos to him for openly admitting that he has made all sorts of errors because he's not perfect. No one is perfect. So some of Buffett's errors that he has admitted to openly is passing on early investment opportunities, such as like companies like Google. He didn't get in on that. And so I think the lesson there is that even legends are imperfect, which is the truth, right? So don't put them on a pedestal and think that they're perfect and you have to be perfect in order to be a very good trader. That's not true. No one is perfect. So what is Warren Buffett up to today? As of today, Warren Buffett remains chairman and CEO of Berkshire Hathaway. Even in his 90s, he continues to write annual shareholder letters, make capital allocation decisions, influence global markets with the size positions he trades. That's a big deal. Like, damn. His legacy isn't just wealth, it's wisdom, experience, core principles. The example of longevity in the stock market world is heavy with him. Like he really was strong and logical and smart and constant learner. And so he held a very long time in trading. And I think that this bodes to just stay steady. Don't chase the flashy wins, but instead like lock into a really successful system and let that compound. And he is such a beautiful example of that, which I really, really love that. So anyhow, I want to wrap it up. I want to go over just real quick the actionable takeaways that we can learn from what he had did and what he created in his world. I want to bring it home in a way that applies to us with my favorite thoughts and things that I had learned, the energy, the who he is as our legend today. So core principle, right? Protect your capital first. Your job is not to win every trade. Your job is to stay in the game. I get that. Okay, also trade less and think more. Buffett wins by thinking, not reacting. He won and he created his empire by really making sure he had the best value and opportunity and then capitalizing on it fully when he did. And so for us traders, I think before we trade, we want to ask, am I planned? Is this thoughtful? What are all my validations for this trade? Or am I trading from an emotional place, fear, greed, FOMO, revenge? If you're trading a strong setup that you plan, get it. But if you're starting to feel like emotional and you just want to chase the wins and you really want to get this account to pay out or what have you, that is not your most strong stance. And so maybe check yourself on that, right? Also develop conviction. So know your setups deeply because confidence comes from preparation and understanding and wisdom and seeing things again and thinking critically about them and having a lot of faith, right? Not hope and gambling kind of energy. So deep conviction, I think, is valuable. Also, I think Buffett was a good example on mastering your psychology. And so I have a huge, honestly, psychology element. I teach psychology at Blue Sky Trading Company. And like that's Market Mamas, right? It is a trader psychology podcast. And there's spinoffs and different, resources and technicals. But the heart of a lot of the things the conversations that I bring are trader psychology. And I think Buffett is such a great example of that. I think his greatest edge wasn't necessarily intelligent, but more so temperament, because a lot of his like great wealth building was that he had a lot of patience and conviction in what he did because of the research that he had done. And he fumbled. There are multiple examples of the way that he fumbled this time every once in a while. You know what I mean? Human edge, right? But also he held through a lot and he was very patient, and he's such a good example of that. He has said that success in investing doesn't correlate with IQ, but with temperament. That's the Buffett quote, and I think that he really embodied that, right? He's not saying I'm the smartest person in the world and I know everything. He's saying I am patient and I will do the work and I will only execute when I have conviction and I will hold. And that is so powerful, I think, because when you have a core edge in trading, just settle the F down and execute it patiently and calmly and with reason, then that's how we get, the money in our bank accounts from it. Also, avoid big mistakes, right? And so you don't need to be perfect. You just need to avoid blowing up. And if that isn't a recipe for trading success, I don't know what is. Like, just don't wreck yourself. And instead, just try to let the wins compound and grow over time and just don't mess it up. Warren Buffett didn't become a legend because he chased every opportunity, right? He became a legend because he was really good at waiting, thinking, acting with discipline, and staying emotionally steady when others weren't. And so for traders, that might be the hardest edge of all, because the market will always tempt us to act. But the real power is knowing when not to, and when to hold, and when to let it play out, and when to, recognize it's not the best setup and this is not the opportunity. Such good lessons. Okay. If this episode resonated with you, please just share an idea. Think about it. Think about what you could learn from this legend and put into your trading principles, and try and prioritize more, even just the patience and avoiding the losses, right? Not letting massive blow up days take you out, and think about how the small days will compound and you'll have home runs every once in a while. That is Buffett energy. And so maybe we each try to take a little bit of this Buffett energy and apply it to our trading this week and have the strongest approach that we can. Because Buffett teaches, with everything that who he is and how he has created his legacy, is that you don't need to do everything right. You just need to do a few things right and avoid the big mistakes, which is literally the kind of energy that I'm trying to do as a trader. I don't believe that I'm perfect. I know that I'm imperfect. But if I don't tilt, my accounts grow. 1 + 2 = 3. So let's just aim for that, right? Okay, so let's take that energy into our next season of trading. And I wish you all the best trades and success and peace and patience and compounding wealth over the years. Thanks for watching today. Take care, everyone. Bye.